Well, joining us for a look at the day's markets action is Anthea Gardner from Cartesian Capital. Thank you so much for your time, Anthea. The markets are under pressure on all sides. The JSE's extended its losses, and the rand actually crossed that 19 rand mark against the US dollar. Even on the JSE, we saw the PGM stocks, getting the most heat. Is this all a ripple effect of China's fourth quarter GDP that surprised to the upside? Downside, rather.
So, Naji, I think it's conflation of factors, actually. So we're just following the rest of the world lower. And firstly, we had US Fed governors saying that there's no need to cut rates as quickly as they have in the past. Then, of course, that Chinese economic data, not just the GDP number, but there's a couple of others as well, gave markets a bit of a scare, which is weird. I mean, what we wouldn't give for over 5% GDP growth. And then there's no end in sight for this Middle East war. And so there's no reason to buy the market. Actually, I think that's what's happening today.
Yeah. Let's actually unpack that China print because, I mean, as you say, we'd give so much to have that more than 5% growth. Of course, it did miss analyst expectations, but actually looking at the target of 5%, they even surpassed that. So just unpack those figures for us, but also because, I mean, we also know that last year was the first year, after coming out of those COVID restrictions, and maybe whether the trajectory looks better from here on out.
Right. Yeah, it's a good thing to unpack these numbers, actually. So it came in at the GDP growth number came in at 5.2%. So as you say, hitting government's official target quite comfortably. But markets worried that about the ongoing property crisis. They've got slow consumer and business confidence. They've got deflationary pressures. There's weak global growth, which has resulted in China's export number falling for the first time since 2016. And I know that exports are not effectively a factor within Chinese government control, but I have no doubt that the party considers it when setting their GDP target, and no doubt the world is watching this, right? So there's another thing that's worrying me a bit, is that the last time we heard youth unemployment in China, and youth being under 24 years old, was 20%. But China's now stopped publishing that number. So we don't really have handle on what the metric is, which we consider, I think, a good indicator of where the economy is going. And so I think it's just all of that coming together, combine that. And so can I just say that I think the Chinese governing party don't really care too much about what the rest of the world thinks. They probably do because they give us a target that they say they're going to reach. But actually, investors have been really underwhelmed by the policies that they've introduced to maintain economic momentum. And so for us, we publicize and it's very standard and very traditional. But Chinese economic growth, in my opinion, will be driven by factors that we, as the capitalist Western world, I don't know what else to call us, for want of a better phraseology, what we would consider to be mainstay.
All right. Well, I mean, as we're talking about issues abroad, let's go over to the UK. That inflation figure for December actually surprised to the upside. So analysts were expecting 3.8%. That's from 3.9% the previous month, but it actually went to 4%. But also, I mean, this isn't a trend that we're unfamiliar with in December, because we also did have that US inflation print for December coming in hotter than what markets had anticipated. And I'm wondering if this is maybe a trend that we can expect also in South Africa?
Oh, wow, that's a difficult question. So will higher UK inflation translate into higher South African inflation?
Yeah.
I'm not sure, because we do import inflation. A lot of our inflation is driven by exogenous factors, but I'm not sure that it's the same as the UK. So in the UK, we saw inflation driven by alcohol and tobacco prices, and there was really a jump in the tobacco duty.
Yeah.
I don't think as far as I know, I don't think we've implemented the same duty. And as well as the other thing that drove that inflation number is seasonal airfare increases in the UK. Look, if I lived there, I'd also want to run away from that weather, terrible weather they've had. But Zanati, I think we need to remember that the UK had the highest consumer inflation among developed economies last year. And this trend seems to be now leveling out with other developed economies where the inflation number is more or less the same, call it, considering what they had previously. You know, there was a 10% CPI number last year. And so I think it's a good thing for the UK. And by the way, while we're talking about it, are you watching this Rishi Sunak thing and the Rwanda policy? You know,
Yeah.
I think it's just a bit of Schadenfreude from me, light relief, you know, that not all it's not just our politicians.
Yeah.
You know, they
Exactly.
could very well have a catalyst for a general election coming up soon.
Yeah, indeed. Anthea, we have about 1 minute, but before I get to your stock pick, I quickly want to check in with Pepco, because as I was looking at the different company, share price movements today, I saw that Pepco was down there with the PGM stocks, was down about 4%. And there were no specific company news.
Well spotted. You spotted the perfect beta stock. So the share went ex-dividend today. The dividend yield's about 4%. The market was down 1.5% or 1.7%, call it. And if you add those together, that's pretty much how much Pepco fell, even though there was no news. So there was no news to hold it up, but there was enough mathematics and beta to push it down. So it looks weird, but it's just because it was ex-div and the market was down. Other ex-div stocks didn't behave quite as badly, I must say. You know, so we had AdCorp, we had RFG, we had Lewis and Tiger Brands, and they kind of held their own despite the going ex-div today.
Okay. Well, thank you so much for explaining that to us. Let's now get to your stock pick. Anthea, what will it be?
I'm going with Curro, sticking with the back-to-school theme today. It's a stock we do like and have in our portfolios. You know, the last they reported was last year. EBITDA margins improved slightly. We think there's definitely still a lot of demand for schools, for the Curro-type schools.
All right. Well, thank you so much for your time and for your insights on what has been driving investor sentiment today. That was Anthea Gardner from Cartesian Capital.